Hello and welcome everybody. Happy Friday. We have made it through another week. The market has made it through another week, and this time we've come out on top. It was a lovely but crazy week in the market, and for some more insights about that, stay tuned for our newsletter on Monday. But for today, I want to try something different. Often these webinars, I'll talk and I'll create a big presentation, go through the presentation, and then towards the end answer some questions and maybe go to some websites about the presentation topic. Today I want to try something different. So the focus of today's webinar is not going to be the presentation. I instead want to go explore some data with you all. For Sectors Made Simple members, you all should already know that we released the backtesting engine for the matrix. It's an ability to go in and create strategies using the matrix and see in real time, using real data, how those strategies would have done over the past week, 2 weeks, month, even up to 5 years. So today, what I want to do with you all is I want to go explore that. I will tell you right now, I did very little kind of planning for what I want to show you. Instead, I want to talk through my thought process, and what my goal will be is to create the best strategy that I can using the information on the matrix. I did not prepare some magical story, there is no, and they happily lived forever after at the end. I want to share with you guys real numbers and real data. I want to show you my real thought process. And through that, because this is not some rehearsed thing, I want you all to be able to join me in this exploration, really. Members have access to the website that I will be using. So I will encourage you all to join me and work alongside me. And I want to get your ideas. I want to hear how you would want to see a strategy created. Is your strategy one that trades every month? Is your strategy one that trades every week, but only on Wednesdays? That is going to be the goal of today. I'm going to go into the details of what backtesting is, just so that we're all on the same page. But from there, it's all going to be exploring the backtesting engine together, using it to create real strategies, and getting to see how those strategies can be put into practice to invest. Now, again, I do have to say that we are going to be looking over real data using the real market, but past results can never guarantee future performance. We never know what's going to happen in the market on Monday. So trading strategies should be taken as advice, but never as a requirement. After all, we are creating a robot. We are smarter than robots. We are humans. So because of that, we can use the robots as guidance, but I always encourage you to do additional research. If you have time, go in and explore what it says or what it recommends to you so that you make the most informed decision you can. So that's a lot of info, but we'll unpack it bit by bit, and we'll have some fun along the way. So before I go anywhere, let me say hello to all of the viewers we have with us. Hello, Blaze. Yes, you are first. You are always here first. Rocio, Rita, Francia, Emelida, Gloria, Nancy, Romulo, Kira, Wendy, Kike, Rosa, Andrew, Vero S, Eddie, Pablo, Erika, Jose, Vero, Magnolia, Sean, Juan, Delia, Rina, Ana, Regina, Alexis, Marta, Rita, Magnolia, Mabel, Karina, Chela, Elena, Gerardo, pleasure to see you here, Lorean, and Roberto, and Irma. Welcome everyone, both returning and new. It's a pleasure to have you all with us. It is going to be an exciting webinar today. So I'm going to stop talking about all of that. Let's get right to the action, shall we? So I'm going to first start off by just going through investment strategies and just talking about the basics of what an investment strategy is. And then we'll go into some examples. So A trading strategy or an investing strategy, hello Maida, is a recipe for how to invest. It is how much flour do you put in, how much sugar do you put in, and in what order. And these strategies can be very simple. Flour, water, and salt can make some types of bread. Or it can be very complex, hundreds of different ingredients all working together. And then other strategies may be as simple as saying, do I invest today or do I not invest today? While others may be helpful in not so much telling you what to invest in, but giving you a list of things that you can look at to invest. Now, one of these, the red light, green light, go or no go, is awesome because it tells you what you want to know very quickly. Do I invest today? Yes or no. But if you want to have a little bit more choice, having a strategy that is a little bit more of a selection, so like saying, instead of saying, do I want chocolate ice cream? Yes or no. It's saying, do I want chocolate, vanilla, strawberry, or pistachio ice cream? That is two different things. Some people might like just the yes or no. Others might like having the options of what flavors to choose from. Now, I do want to say that strategies are slightly different than analysis. And I'll go into this in a little bit more detail because it is important. Analysis is the way of finding the value of a company. And there's two main types here. We have two main categories of analysis. We have fundamental analysis, which uses a company's earnings and the value of that company on paper to choose if a company is worth investing in or not. Whereas technical analysis uses the company's price or the price in the past and how the prices have changed to decide if that company is worthwhile to invest in. Now, analysis is very useful because it gives us an idea of how strong an opportunity is, but it's not so much a go or a no-go decision. It's not supposed to tell you you do or don't invest. It instead just tells you how good of an investment or how bad of an investment opportunity is it. Now, strategies, they may use analysis as part of the strategy, but all of these strategies will usually end in a list of potential investments or a go or no-go decision. A yes, you invest in that, or no, you don't invest in that kind of decision. So the difference is analyses and analysis gives you information. Strategies give you a decision. They give you something at the end that you can use. You don't need to interpret a strategy. The strategy is already interpreted for you. So I guess that the best way I could put it is something like this. I want to go for a hike. But to decide if I want to go for a hike, I need to check what time it is. I need to check what the weather is. And I might need to check if I have anything scheduled, if I have any meetings or anything I need to do during the day. A strategy would say, go hiking or don't go hiking. Analysis would be like checking the weather. It would be going in and looking at the weather and saying, there's a 20% chance of rain and it rained yesterday. So maybe the trail's a little bit muddy. I don't want to go hiking. I don't want to get my boots wet. Or it may be that the weather is perfect. The weather has been perfect. So that analysis of the weather then helps my strategy of do I go hiking or not. But here's the real value of strategies, and this is what we're going to look at today, is that strategies can be backtested. They can be kind of used because with a strategy, we can see how that strategy, if we had used that strategy in the past, how we would have done. Yes, past results can never guarantee future performance. Just because the market was flat yesterday doesn't mean it's going to be flat today. The market will change every day and very unpredictably. But what we can do is say, with that strategy, what if I was back in time? What if we pulled it back to the future and we went back 5 years and we used that strategy up through today? How would we have done? Backtesting lets us do that. So let's go through an example of how we would create an investment strategy. So the first thing we're going to want to do is decide how often we're going to do what's called a rebalance. A rebalance is, when do you invest? That's all that means. So if you have a 1 week rebalance, that means that I invest once every week. If I have a daily rebalance, that means that I reinvest every single day. If I have a 1 month rebalance, once a month. Pretty self-explanatory. Now we get to decide what this strategy is. If this strategy is a go or no-go kind of strategy, if it tells you invest or don't invest, we need to decide on what that number is that we use as the yes or no. If we're not doing that, we need to decide what we look at to narrow down the list. Think about it like this. The reason we like sectors is because it is 11 sectors that makes up 500 companies in the S&P 500. So we go from 500 to 11. Now, 11 is still a lot if you don't have a lot of time to invest. What if you only have 5 minutes before you go to work in the morning to decide what you want to invest in today, or this week even? You don't have time to look at 11 different things and decide which one's the right one for you. That's where something like the matrix becomes useful. The matrix lets you see very, very quickly what's the top sector. Financials, building materials, industrials. All right, now we have a little bit better of an idea. An investment strategy takes things one step further, because now instead of just saying what has the highest total count, we can say what has an X count momentum of 2 or more, let's say. So what has improved in the short term? That is something we can do with a strategy. So these strategies should be yes or no questions. Does financials have a X count momentum of 2 or more? Yes or no? If yes, add it to the list. If no, push it off. We'll see you next week. And if possible, checking how your strategy would have done in the past is the most important thing about creating a trading strategy. And I'll go into a little bit more detail here. Members, in Tuesday's webinar, I talked a lot about the news and how the news does something called cherry picking. They grab the little bits and pieces of data that tells their story. It doesn't mean it's the whole story. It's just the story that they want you to see. With backtesting, this can happen, whether it's intentional or not. So when you're backtesting, when you're looking to see how your strategy has done in the past, it is very, very, very important that you don't just see, okay, my strategy made me money, and take it there. No. Test that strategy. Make it a little bit longer. make it a little bit shorter. Or, as we'll see today, one of the most important things to test, especially for a strategy that you invest once a week or once every 2 weeks, make sure the day of the week you invest in makes sense. What you'll see is that if you invest in Monday, it will be different than if you had invested in Tuesdays, Wednesdays, Fridays, anything. The day of the week matters. Is there a best day of the week? That I don't know. And that's what we're going to explore together. But what I'm really trying to get at here is that we need to make improvements to the strategy. Test it. See what works. See what doesn't. Be happy when we find something that doesn't work, because that just gives us a better story. It gives us more information. I always say that a loss or failure is never a bad thing, because you learn a lot more when you've done something wrong, because you learn what you did wrong. When you do something right, it's super easy. Pat yourself on the back. We're all good. You don't look at it and say, okay, I did good, but how could I have done better? Failures will give you that opportunity where you can always ask, how can it be better? How can I make this strategy better? And that's what the backtesting engine does. So let's look really quickly at the pros and cons of investment strategies, because these are not some simple answer to fix everyone's problems. This is not the Windex of solutions here. It does have its drawbacks, so I want you to all be aware of that. So the reasons that investment strategies are great is that they make decisions faster and easier. If you have a simple strategy, it may be that you can make your investment decision in 5 minutes while you're drinking your morning coffee. But strategies can also be built and tested to make sure that they're not only profitable short term, so in the past month, but we can check to see how they would have done in the past 2 months, 6 months, year, or with our backtesting engine up to 6 years ago. We can see how the strategy would have done. This is not true for the matrix, but backtesting strategies can be used with technical and or fundamental analysis to make informed investment decisions. For a little bit more information on this, I talk about it in more detail in our first backtesting webinar. But the drawbacks: the market changes. And the higher the volatility, the VIX, in the market, the more quickly we expect the market to change. So when the market changes, when volatility is high, our strategies, it's harder to create one strategy to rule them all, because the market will change. What worked last week may not work today. If any of you have kids out there, I think about it like trying to find their favorite food. I remember that when I was a kid, my favorite meal was steak. But that never changed. I liked steak from 5 until today. I can still eat the same steak and I'll be happy. But some kids, they're a little bit more picky. One of my childhood friends, he would only eat chicken tenders. And then the next week, he would only eat chicken nuggets, not chicken tenders. Then the week after, he would only eat fish. And then back to chicken tenders again. So you couldn't just say, let me feed him chicken tenders over and over and over. He would get sick of it. For me, I could have steak any day of the week. So the market will change, just like what a kid wants to eat will change. And you can never predict when they're going to stop wanting chicken tenders and start wanting chicken nuggets. So finding a strategy that can be changed a little bit and that you can work with over time is very, very important to avoiding this issue. Strategies will weaken, and the best strategy is one that you change over time as the market changes. Then, it can be hard to find a difference between what I call a failed strategy and a bad period in the market. What I mean here is that sometimes the market just doesn't do well. We have market corrections, the market goes down, or the market just doesn't go anywhere. So, how do you know that your strategy is still working? That's a hard question to answer. But the way we can try and avoid this is by looking at a shorter period of time. Instead of looking at just 1 year, we can look at 1 month and create something that works in that 1 month, and then expand it from there to see how it would have done to make sure that it's not just getting lucky. And then the last one is what's called sample selection bias. And this gets back into what I was talking about with kind of cherry picking information, picking the parts that only make you happy. But this one is not as intentional. This one can be a mistake that happens when you're backtesting strategies. And it can come from a couple of different places. One, and probably the most obvious one, is that if all you care about is did I make money or not, if the market overall made money, more often than not, you're going to make money too. But it's not because your strategy was super strong. It's just because everyone was making money. Then there can also be a bias in the dates you choose. If you choose too long of a date range, it could be that the strategy did really well 5 years ago, but hasn't done anything since then. But because it did super well 6 years ago, it still looks to be better than the market. Or you can choose too short of a time, where if you only look at 2 weeks worth of information, but you're testing a 2-week strategy, sure, you made 10%, but how would it have done 2 weeks before that? Or 2 weeks before that? And then the last one, but we don't really need to worry about this one as much because most of the backtesting we're doing is about, I'd say, a few months to a few years. Survivorship bias, if you're backtesting a strategy like Be a Profit, can happen, where it's this idea that why do you not see bad restaurants in your area? Why, when you go on Yelp, are there no restaurants with only 1 or 2 stars? It's because those bad restaurants don't last very long. Their reviews will be bad and they will close, or the health inspector comes, sees something they don't like, shuts them down. It's the idea that the reason that we only see good companies is because those are the companies that have survived the test of time. Then the last thing I want to say about this is that bias is never something to fear because it is inevitable. We will always have some bias. So don't fear it, learn to embrace it, and learn to work with the bias to figure out how you can take that bias and try and remove as much of it as you can when creating your strategy. And I promise you, it's a lot easier to do than you'd think. And now, the ultimate question. How do we decide when a trading strategy is good? How do we decide when it's good enough? Well, it depends. There is no simple answer because there's no way of saying this strategy is perfect or this strategy is now good. But there are some questions that we can ask that will help us to find out this answer. First, did the strategy make money? If a strategy didn't make you money, it's not a very good strategy, is it? But making money is nice, but don't forget, we spend a lot of time looking at the market because we want to beat the market. So you always need to ask, did your strategy beat the market? What's the point of spending 10 minutes a day investing if you could put your money in SPY and do better than a strategy that you could come up with otherwise? So, checking to see if our strategy outperforms the market is important. Another question here is, did it have one good year or one good month? Or was it consistent? A strategy that made you more money is nice, but if that strategy was bouncing up and down where you would think about GameStop. You can look at GameStop and say that, oh, I made 200% return on buying GameStop. Yes, and you also had the price spike up to 200, back down to 30, back up to 200. That's a wild ride for any investor. So if your strategy is kind of like GameStop, that may not be for everyone. Some people like having a slower but more consistent strategy. It doesn't make you a millionaire overnight, but you know that tomorrow morning when you wake up, the money is not going to have disappeared and leave you asking where did it go in the process. Wendy, I'm so glad that your children like to watch these. It is never too early to start learning about investing. Funny enough, I started investing when I was 12 in a fake stock market competition called How the Market Works and the Stock Market Game. So it was a class that I took in my middle school, fell in love with investing, started reading my mom's books and listening to my mom's radio show, and really fell in love with investing from there. So especially with stuff like this, where it's almost a game. I love backtesting. And it is very, very fun to play with. Raul is asking, is there any day you recommend for investing twice a week? So with the backtesting engine, we don't have a way of investing twice a week, but we can create one that invests every day or every week. And from there, you can always rebalance whenever you want using the same rules that we have. There's nothing stopping you from taking the strategy that you find and making it work for you. After all, you're the one investing. You want to fall in love with your strategy and make that strategy the one that works for you. So, the last question we want to ask here. Did it make money? Did it outperform the market? Was it consistent, or did it just have one good year? But what good is a strategy if it made you money 5 years ago? I want to know, is it making me money today? So we want to find a strategy that is performing well today. And then, Raul, to your question, keep in mind that if you are backtesting, you are telling a robot how to trade. You, after all, are a human, and you are so much smarter than those robots. So learn from them, but invest your way. Now, machine learning, creating these robots, this is a multi-billion-dollar industry of trying to create the perfect trading strategy. Because with the power of trading strategies, we have the ability to develop computers that can use these strategies and make money. But we're not talking just buying and holding like you or I may invest. We're talking what's called high frequency trading, or HFTs. These are computers that they will trade thousands of times a second. And they don't want to make $10. They don't want to make $100. They want to make 5 cents, 10 cents. But when you're making 10 cents 1,000 times in a second, that's $10 a second. $10 a second is $36,000 an hour. So it starts adding up pretty quickly. So what this creates is computers that try to predict trading in the next millisecond. And they're not beating the market. They're just beating all of the other robots. But that's not why we're here. We're not here to learn how to trade like a robot. We're here to learn how to trade like humans and to learn how the backtesting engine can be used to help us trade. Romulo is asking, I learned a lot from Julie and Jonathan, fundamentals and technical, the market behavior, and much more, but I've been honest, I've had a hard time finding my good strategy. Well, let's work on that. Because now let's go apply this idea of trading strategies to the matrix. Before I go to this, I will say this right now. Today is March 26th of 2021. I will be using the matrix data from the end of 2015 from the beginning of 2016 up to today. I cannot predict what's going to happen in the market. The strategy cannot predict what's going to happen in the market. So whatever strategy we create, please know that it is using historical data. We cannot know what's going to happen tomorrow, and any strategy should be taken as not so much guidance, but as a second opinion to your own. I always recommend doing your own research and coming to your own conclusions. This is all just for educational purposes. So keep that in mind. But with that in mind, let's go explore together. This is where we get to the fun part of the presentation because my prepared part ends. Now I am exploring with you all to try and find the best strategy we can come up with. So we're going to go through an example right now, Raul, of using the matrix and creating a strategy. Lucia is asking, in your opinion, what is a good day of the week to buy? We're going to find that out right now. Alrighty. So here is the matrix. You can access it if you have a subscription. You do need a subscription to get to this. So if you have a subscription, you can go to dash.sectorsmadesimple.com. If you have a subscription, I encourage you to join with me right now as we walk through all this. So you can go to the dashboard and log in. And then up here in the top right is that little 3 lines. I call it a sandwich. So we click on the sandwich and then click backtest. And that now takes us to the backtesting engine. This is all using the matrix information. So this is using all of this cool stuff. And we can build and create a strategy. So let us get started. I'm going to first try and create a strategy that works for every week. We're just going to look at a 1-week rebalance. And we're going to create a very, very, very simple strategy. We go here to start making a strategy. The first thing we need to add is what's called a metric. A metric is just a number. It is what is the number and what do we want to do with that number. So we click here on add a metric. And under metric, we're going to choose, I want to try a strategy that I've long looked at, which is a pretty simple one. It is X count momentum. If you click use momentum, that means that we're now using the momentum table. Just to show you what that is using this table right here. So we're going to use X count momentum of 2 or more So this is now going to say X count momentum 2 or more in the 1 week momentum. If you were to create a daily strategy, you may want to change the 1 week to be 1 day. But we're just going to try this. And we're going to start off with the date that it has in there, which is about 6 months ago. So September 22nd of 2020. So, and we have up here top sectors each period. I'll show you what that is in 1 second. So we're going to click Run Backtest. And over here, we should see when it says when we're done. Backtest successful. And ta-da! Here's how the strategy did. The green line is our trading strategy. The black line is the market. So we see up until 2021, our strategy was doing worse than the market. Then it jumped up and has been doing better and returned higher than the market has. So again, what we are seeing here is on September 22nd of 2020, we started with $10,000. Today, we would have, if we go down here, we would have $12,588.35. And what this tells us is quite a few things, and let's break this down. We see the rebalance date. That is the day that we went in and traded. Then we have the date that we bought and sold, how much we made, how much the market made, and then who did better. If this return difference is above 0%, we beat the market. If it's below 0%, the market beat us. So we see here that we outperformed the market and ended up about $800 above where the market was. But if we scroll all the way over to the right, this is where the magic happens. Because here we can see what we would have been buying using this rule, X count momentum of 2 or more. So what that means is you go here, momentum compared to 1 week ago, sort by, and we would buy whatever has an X count of 2 or more. There's nothing here, so we would hold cash. If there were more things, so let's see if we went here, if there were more things that had an X count of 2 or more, we would buy all of them. So here we would buy real estate, healthcare, and staples. If we scroll down, we can see under sectors purchased what we owned at any point. So we see that here we owned between September 22nd and the 29th, we owned communications and technology, then SPY, then a whole bunch of stuff. Maybe that's a bit too much. Maybe, I don't know about you, I don't want to have to go in, sell off a bunch of stuff, do a bunch of math to figure out how much of each sector I need to buy. I don't have the time for that. I want to buy one thing, and then next time I want to buy another thing, or I want to sell everything. I want to make my life easy. Up here under top sectors each period, we can go to 1, 2, or 3. If we click on 3, let's see what happens. Not much changes. But now you see that the most we will ever buy is 3 sectors. Sometimes if there's only one sector, we will only buy one. And if there are no sectors, like this chart would have, there's no sector that has an X count momentum of 2 or more, then we would just hold cash. So you would sell everything and just sit on your little pile of cash until the next rebalance period. Again, if you have a Sectors Made Simple subscription, I highly recommend you join me right now and mess around with this a little bit. Test it out, because this is going to be an amazing resource for finding the strategy that's best for you. Alrighty, let's now change this to 1. So now let's try and see what would happen with a once top sector. So now we're only investing in one thing. Now we see that there's only ever one single company. And yes, this is buying weekly. And we see what day it's rebuying on over here. So it's rebuying on the 22nd of September, which was Tuesday. Tuesday. So this is what I would consider to be the most realistic kind of strategy. One that you're not buying everything, you're only buying the top thing. So here, I would be buying SPY. Then after I've held SPY, I go in and say, what is the new top sector? Energy is the new top sector. Okay, sell all SPY, buy all energy. Then hold. Say we get to here now. Sell healthcare, buy nothing. Just hold cash. All right. So this is a very, very, very simple strategy. But I want to try and test something now, because we said that this strategy works, but we want to make sure it's real. We're not just getting lucky. So we're going to go here and we're going to change to test what Kike is asking. If we change the day of the week, how does that change our returns? So we're going to go down here and note this number, 13,600, we'll say. So now what we've done is gone from September 22nd to September 21st. So now this would be rebalancing every Monday. All right, similar, but a little bit different. So it's a little bit lower. Now, let's try Wednesday. All right. Wednesday is now up at 14,200. All right, looking good. $14,100, still good. $14,000. So it looks like Monday is the worst day, Tuesday is the second worst, and then the best day would be Thursdays. But again, this is only if we started in September. I told you about this whole idea of cherry picking, of bias. Let's try and remove that. Let's now go and look at let's go look at a shorter period of time, because I want to see how this strategy would have done if instead of starting in September, we started in the beginning of 2021. And we'll start on Monday and see how we would do. All right, 11,200. This strategy is using the matrix. So what it is saying is on this day of the week, on Monday, go in, look here at the momentum table, at the 1 week ago momentum, and take anything with an X count of 2 or more. And yes, Kike, Sectors Made Simple started in July of last year. So that is all this strategy is. So think about it like that. You could, if you wanted to use this strategy, you could go in, look right here. All right, nothing has an X count of 2 or more. Sell, hold cash, see you next week. That is as simple as this strategy is. Now, we ended here at $11,000. Let's see how it would be if we did Tuesday. All right, Tuesday is still slightly better. Wednesday. All right, I see. So now Thursday went from being the best day to being worse than Tuesday. Tuesday seems to be the best day now. Well, first let's test Friday. So since January, Tuesday seems to be the best performing day with this strategy. So what we've done is we started with 6 months. Took a very simple strategy and tested to see how it would have done. Then we moved the day to see if it made a difference what day of the week we traded. When we did the 6th month, it seemed like Thursday was the best day. Now it seems like Tuesday is the best day, but the one thing that is the same between both of these is that Monday is the worst day. Now, let's try a year. What if you don't want to have to worry about creating new strategies? What if you want to just be able to go in, find one strategy for 1 year? Let's see how we would do. So, you remember how I said that strategies will change? This strategy underperformed significantly during 2020. It wasn't until the end of the year that this strategy really started to do well. What if we change the day? Does that make any difference? Let's find out. So here, this is worse. Monday is much worse. Tuesday, or we already tested Tuesday. Let's try Wednesday. All right, about the same as Tuesday. Thursday, worse. And Friday, there you go. So for the past year, it seems like Friday is the best day. But now let's go take a look at one other thing. And my favorite part of the of the backtesting engine is this. Right here, there is an export button that you can download. And we're going to go over here and we're going to import. We go. So this is sheets.google.com. Import, upload, and I can drag that data over to here. Sorry, give me 1 second. Sorry. All right. So what we have now is the data imported. We have the data imported. Why did it not import? Open now. There we go. So here is all of that information that we just had, all in Excel. That was the cat, yes. She's not feeling great right now. So anyway, let's now look at what this can do for us, because this is where we start to have some real control. So I'm going to show you a couple of really easy but strong tools that you can use. One, we're going to type here equals, which creates a formula. And we're going to go to min. Min will give us the lowest number. So what we can see is what is the worst the strategy did. And we see that it's 88%, which means that it lost 11.2%. Then we can do max to see what's the best the strategy did. If it will let me. The best the strategy did was 20.6%. Let me make these a little bit more readable. So that is what we have here. And now, my favorite is we can do average, where if we do average of this, no, let's not do that. We can see that the average return is 1.2%. So this is from this strategy. Let's now look at what happens if we go back to the Wednesday version. Because remember, the Wednesday one, it didn't do as well overall. But let's see if that holds true when we export. So I'm going to go ahead and do export there. We're going to go here to import, upload, import data, and I'm going to go ahead and copy these formulas. Okay, so now we see something very, very interesting. This here is the trading data from Friday. This is the trading data from Wednesday. Our average is similar, 1.2 and 1% return every period. What's different here is that the worst that we had was 11% on Fridays. On Wednesdays, the worst we had was 7%. Whereas the best is 20 and 16. So what that tells us is that Wednesday and Friday have very similar returns from week to week. But Friday was more volatile. There was lower lows and higher highs. Wednesday, slightly lower and slightly lower. So a little bit more consistent. And you can do this for any strategy that you come up with. We can also make these strategies more complex. So let's now try, now that we're looking at a longer period of time, I want to find a strategy that does better in 2020. As the market is recovering, I want to find something that does better. So let's try this. We can add BPI, where now we want something with an X count momentum of 2 or more, and we want it to have a BPI of less than or equal to 65%. So we will only take a sector if its BPI is in a column of X's and is below 65%. So the only ones we would choose from here are health, staples, technology, and utilities, for example. Let's see how this strategy would do. Okay, so that doesn't do very well. Let's now try this. Instead of saying one top sector, let's do all sectors. So we give it a little bit more choice. All right, still doesn't do very well. We had a pretty bad period here in September to late October, so that one doesn't work. So what you can do is create a strategy. Start off with what you think would work. So Elda, yes, with this example, the strategy would be you go and buy whatever sector has an X count of 2 or more for the momentum. And then you would buy and hold that. So again, let's test this from the beginning of January, for example. Oh, and we want one sector, not all. Let's now change from once a week to once every 2 weeks. Okay, so what we're seeing here is it's very, very similar, where we have once every week, about 12,000, once every 2 weeks, 12,000 as well. Let's now try this since last March and see what we have. All right, so it's slightly different, but still, we're not really finding something that did well through this period here. Kike, so you would buy on Thursday and then you would hold until the next Thursday. And then you would sell and then rebuy whatever the new sector is. Or if there is no new sector, you would hold cash. And again, all of these are just examples. What this is trying to teach is that if you come up with a strategy that works short term, you can test it to see what days of the week make sense. So you're now testing it long term, which is the 1 year test, short term, 3-month test, and then seeing what day of the week gives you returns. And remember that it's not just what has the highest number at the end. You can go ahead and download the CSV and then go in and do a little bit of math using min, max, and average to see what the worst return, best return, and average return are. So that is what I want to show you all today. I want to show you how a strategy can be very, very simply created and tested, because this is your ability to create your strategy. I went through an example today of trading once every week, but maybe you don't have that option. Maybe you don't want to invest once a week. You can find a strategy that works for you and when you want to invest. So I encourage you all, anyone that has a subscription, to go and try the backtesting engine. You now see how it can work and how it can be done. And you can see that simple strategies like X count momentum of 2 or more outperforms the market in the current period. This may change. So I always recommend going in and trying these strategies again, seeing if what worked still works. Because as we see here, what worked today may not work 6 months ago, a year ago. So explore, have fun, test, see what works, and see what doesn't. I love using the backtesting engine because it is simple and easy to see the results. And when you make a change, for example, you get to see those changes in real time to see how those changes would affect your strategy. Again, this is something that is available at no additional cost to Sectors Made Simple subscribers. If you do not have a subscription already and are interested in getting one, we do have a promotion going on right now that you can get a $100 discount on your first year subscription, and the person that provides you with their referral code gets a free tablet. So everyone benefits. So there's never been a better time to get involved with Sectors Made Simple. We have just released this backtesting engine for all of you to be able to use with the Matrix, and we have a promotion going on that will let you get involved with Sectors Made Simple for cheaper than ever. This is only for a limited time, so if you're interested, now is the best time to join in and get involved in the action. Members and non-members alike, if you have any questions, comments, concerns, or anything that you would like to see me cover in a future webinar, please shoot me an email at support@sectorsmadesimple.com. I'm always here to help answer your questions. We do not have a support team. The support team is Kira and myself. We firmly believe that we want to be direct, transparent, but mostly personal with all of you. So I personally look forward to hearing from all of you and hearing how we can help make investing with or without the Matrix that much simpler for you all. Thank you all for joining us today, and we'll see you all very, very soon. Take care, everyone. Have a great weekend. Bye.